Welcome, everybody. Hi. I'm Laurel Touby. I'm the founder of MediaBistro.com, which I sold, and now I'm doing venture investing with Flatiron investors. Give it up for me. This is Kelly Ford with EDISON Partners. Come on up. Say hi. Stand. Give it up for Kelly. All right. This is SUTIAN Dong with Female Founders Fund. Give it up for SUTIAN. And Scott Birnbaum with Red Sea Ventures. All right. We're gonna help you figure out how to get funding from us or from people like us. So my first question to all of you guys is, how many of you are seeking capital right now? Raise your hands. Okay, great. How many of you are seeking capital in the early stage? Raise your hands. Ah, okay. How many are you at between early stage? Hey, quiet down over there, cameraman. How many of you are between early stage and your Series A, and you're going for, a little extra runway? Nah, not many. Okay, good to know. How many of you want to be VCs? Raise your hands. Ah, interesting. Okay, so we're going to address all of your questions here right now. I'm going to ask each of the panelists how they got into venture first, so you can learn a little bit about them, and we can humanize them quite a bit. We're going to start with Scott. Scott, do you want to stand up and deliver? Tell us how you got into venture, baby.
I'll stand and deliver. Hey, everyone. So my path to venture was a little bit circuitous. I started a software company my senior year in college in 1999, just before the bubble burst, the big bubble burst. And I ran that business for 7 years, sold that, and then went to law school, of all things, practiced law for a little while at a firm called White & Case. And then went to CBS doing strategy, BD, and product. And while I was at those two jobs, I started angel investing out of my paycheck into some companies that friends were starting. Closer.
Yeah, talk into the mic, baby.
And I discovered that I loved doing this more than I had ever loved doing anything else professionally. And so I set out to raise a fund and closed that in July of 2013, and have been investing out of that since then.
Scott, how big is your fund, baby?
30 million.
Okay, and how big is your check size?
So we tend to write $250,000 checks into seed stage companies, and then we've written larger checks into later stage companies.
And what types of companies are you looking for?
We're looking primarily for consumer-focused businesses. We're looking for almost exclusively New York metro area businesses. And we've invested in connected hardware, in digital media, consumer brands, consumer internet, and marketplaces and SaaS companies.
Give us an example of a couple of companies that we might have heard of, since they are consumer companies. So tell us anything you've invested in.
That you might have not heard of?
No, that we have heard of. Yeah, talk into the mic. Close.
So we invested in Nest, which was a connected thermostat company that was acquired by Google 2 years ago. We invested in a company called Splash, which is an event company, an event marketing company. We invested in a consumer brand called Outdoor Voices, which is sort of fitness apparel. We've invested in Sweetgreen, which some of you may know. It's a chain of farm-to-table salad bars. Yeah, those are some of them.
Not bad. Yeah, not bad. Sit
Thank
down.
you.
Okay, SUTIAN, come on up.
All right.
Tell us your path to VC.
Sure. So I'm a partner with a fund called Female Founders Fund. We're a seed fund based in New York, investing in technology companies founded by women. So the fund itself was started in 2014. I joined rather recently in 2016, and prior to that, I spent a bunch of years at a shop called First Smart Capital, another VC in New York. And my path from or into VC was a little bit circuitous. I was director of marketing of a fashion company prior to that, and spent a lot of time at First Mark looking at the consumer investing side of technology businesses, specifically technology businesses founded in New York. And one of the things that I saw was that over the years I was at First Mark, there was this sort of rising tide of female founders starting scalable and venture-backable tech businesses. And at Female Founders Fund, that's exclusively what we focus on, that there's this new generation of women starting billion-dollar businesses, and we want to be at the epicenter of investing in those.
Awesome. What size is your fund?
So the first fund was a $6 million fund. I'm going to guess that your next question is what check size we write. So we write about 100K checks as part of the seed syndicate into...
Talk right into that mic.
There you go. Can everyone hear me?
Yeah, that's better.
That's better. Okay.
Yeah.
So we write about 100K checks as part of the seed syndicate, which means that it's typically the first institutional round of financing that you raise. So an institutional round is a round of financing that's led by a fund, as opposed to friends and family or an angel investor.
Okay, can you talk a little bit about some of the companies you've invested in over the years, either at Firstmark or here now?
Yeah, sure. So when I was at Firstmark, I'll talk broadly about the investments that Firstmark was part of. So both on the consumer and enterprise side, early investors in Pinterest, early investors in Shopify, in Lumosity and Riot Games, InVision, some of these companies you may use on a daily basis or use for work. And then at Female Founders Fund, we also invest both consumer and enterprise in companies like WayUp, which is a marketplace for college students to find internships, part-time work, and entry-level positions, in companies like Eloquy, a direct-to-consumer plus-size women's brand, in companies like Maven, which I don't think there we go. In companies like Maven.
Uh-oh. We got mic troubles here. Here, use Scott's.
There you go. This is better. In companies like Maven, which is has a mobile app for women's telemedicine, and in companies like InVision, which a fintech platform for microloans in emerging markets. So we're pretty diversified across industries, both enterprise and consumer, investing in anything from fintech, healthcare, IT, enterprise SaaS on one side, all the way down to media, content, direct-to-consumer brands.
You literally have to almost press it up to your lips. Yeah.
Is this
okay? Yeah, that's better. SUTIAN, do you only invest in female CEOs, or do they have to just have a woman on the team?
So to date, we've invested in companies that were founded and are run by women, so female founder CEOs. Over time, that we look at companies that have a female founder on the team who's an officer of the business, so board level important, senior management, who can direct the vision and sort of the execution of the company.
Okay, cool. Kelly, come on up. This is Kelly Ford, Edison. What stage? Yes. Yeah. Well, Kelly can sit or stand, whatever. Talk right into the mic. Tell us your path to VC.
Edison Partners. I've been at the firm about 2 years. I'm actually an operator. Have done the pre-revenue to 100 million thing in go-to-market and marketing and product-related roles over the last 20 plus years. I actually got to know Edison. They were an investor in one of my former companies, Operative, here in New York. I ran marketing for a bit. So got to know the partners, wound up joining there in an advisory role. We, at Edison, we invest in growth stage businesses, so a little later stage than these guys, a lot later stage. And what comes with the check is a value add platform that involves advisory and a lot of executive education and different network-oriented programs. So my background as an operator is a complement, and certainly my responsibility there has been around that value add piece, but certainly involved in evaluating companies at that growth stage, which essentially smack of the shape and size of companies that I grew up in my career.
How big is the fund that Edison invests from?
Our 8th fund, we're close to closing, and our target was 250. We've exceeded that, 250 million. We've exceeded that, and we'll be closing probably mid-year. Okay,
and how big? Well, what are your check sizes?
So the size of company is, we look for a $5 million to $20 million revenue run rate, and we look to put anywhere from 8 to 20 million into a business over the course, over the life of the investment. So initial check could be 8, could be 12, and then we follow on and look to support the investment as the company grows and scales.
Fabulous. All right, and then I'll speak from my perspective. I founded a company, sold it, and took some of that money and started my own micro VC. We look at B2B SaaS businesses. Our check size is between 100 and 300,000. We add value other than dollars in the sense that I'm an expert at marketing and I am a friend of the media, and so I bring that to bear for my portfolio companies. So come see me if you're interested. All right, so now I'm going to ask some general questions of you guys that hopefully will help you in your search for capital. The first question is, what are some mistakes that you've seen founders make when they come to give you a pitch to raise capital from you? Any of you can just volunteer some thoughts on mistakes that are commonly made.
A couple things that come to mind for me in this regard is there's just a need to be so crisp and concise about not only your value proposition, your message, but also how you make or how you intend to make money. And a lot of founders, CEOs, even at this growth stage, don't quite nail that.
So there's been some controversy around path to profitability. Do you guys agree that everybody should be on a path to profitability as quickly as possible and that times have changed?
No. I don't agree with
But
that.
you just got done telling me you want to see a plan for them
I want
to
to see
to make money.
revenue, run rate. I want to know that they're scaling, not testing. But they, you want to be reasonably capital efficient, but you need to invest for growth. If you're ready to scale, then step on the gas and profitability isn't the goal.
Okay, do you
it's
guys
growth.
agree profitability is not the goal?
So at the stage at which I invest, which is the seed stage, it's very early, right? So what we look at is really the founding team. So who are you? What is your background? What makes you best suited to do what you're doing now? The path to profitability can be a long ways away for companies that are raising seed financing. And so it's not necessarily a deal breaker if there is no sort of near-term path to profitability, but there has to be clarity of thought around what the revenue channels can be in the future and that there's a real company that can be made as opposed to we'll think about it in 5 years or we'll think about it in 7 years and we're not focused on that now. There has to be reasonable expectations that you can build a business at some point in the future.
Scott, do you have any thoughts on this?
Yeah, so I think it really, I'll maybe refine what SUTIAN just said, which I agree with, but I think it depends on the type of business you're building. If you're building an e-commerce business and your unit economics are bad, that's not a good sign, and that's probably not a business that I'm going to want to invest in. If you're building a new social network, I don't really care right now about your path to profitability. What I care about is that you've thought of ways you've thought of your product in ways that will allow you at some point to start to generate some revenue. But really all I care about in the short term is this a product that the market's going to love, that people are going to want to use every day, and that is going to grow very, very rapidly.
So you're basically saying it depends on the type of company. I would say for me, B2B SaaS, I want to see that there is revenue in the offing and it's pretty soon. And once you have a product market fit and revenue, then you can turn on the gas, you can add dollars to that and grow that, and it's easy to figure out ways to grow that. So talk to me about how what are some qualities though? I mean, you guys, to me, you mystify me. How do you pick a consumer company that's going to become Nest or that's going to become Sweetgreens? I mean, to me, I could never do it. All these founders look terrific. How do you tell the difference between a Sweetgreens guy and one who's just going to, or girl, and one who's just going to kind of flounder around? How do you do that in the early stages?
So I think for me, it's the number one thing that I look for in an entrepreneur, this is sort of like the minimum requirement for an entrepreneur that I'm going to back, is that they be an incredible storyteller.
But they could be a liar and be a storyteller.
That's okay. I mean, that's not okay, but they still nonetheless have to be. So it's sort of like a necessary but not sufficient requirement. If they're a great storyteller but a liar, that's not going to work. But if they're if they're a great operator but not a great storyteller, that's also not going to work.
Okay.
So for me, especially on the consumer side of things, they need to be great storytellers, and that matters to me because in order to build a great business, you need to convince your life partner that you should be allocating all of your time and your energy and resources away from them towards the business that you're building. You need to convince your family and friends to invest in your business. You need to convince investors, institutional investors, to give you money. You need to convince people, even more, which may be even more difficult, but convince great people to join your company to help you build your business as your co-founders or as your employees. Not pointing at me, okay?
No, I'm not pointing at you. SUTIAN or Kelly, do you guys have any additional thoughts on like what are the qualities? What are the special qualities about this early stage founder or company that make the difference, that make for success?
Sure. So, I think first of all, when I think about founding teams and what's special and unique about them, typically what gets us excited is that there's a unique point of view that the founder has, right? How are they thinking about this market in a way that's just a little bit different than what's been out there? And why do we think that this point of view, if executed correctly, will be successful? And that sort of goes to Scott's point around storytelling, right? Convincing us that this is unique in the market. And then I think second to that, on a company perspective, when you're early, there's maybe a product, a beta out in the market, but what we look at is in the world of limited resources, you're a founder, there's never enough time, enough money, enough people around the table. Like, what have you done that demonstrates you're really resilient, that you're really gritty, that you will figure out how to get, a mile out of the sort of inch that you're allocated?
Yeah, let's talk a little bit about that resilience question. Or did you have a different point?
Related, I think.
Yeah.
I would just add, we invest at a stage where there's established product market fit. So our criteria becomes a little different. But when we look at founders and CEOs, one of the, I'd say, top three things is that founder or CEO's ability to attract great talent and surround themselves with build a killer team and know what they're great at and where they need the help and plug those holes and showcase that team. It's not just the founder show or the CEO show. How are you really going to do this? And you need a complete team at this stage, but that CEO's ability to attract and great talent and surround themselves with great talent is huge.
I would add that the best founders I've seen will not stop at anything. They are unstoppable. They've thought of every single obstacle that could come up, not just that has come up, but could come up, and they've thought of a way around it. And there is nothing else in the world that they want to do. This is their life goal. This is not just a project that they can then move on if it doesn't work out. For me, if a founder feels like there's nothing else in life but this thing that they're creating, that's a successful founder. We have 1 minute left. I'd like to ask real quick, what is the one thing that you've seen done wrong in a pitch? Anything come to mind?
Yeah, so I don't know if it's a thing done wrong in a pitch, but this is something that I feel compelled to kind of share. You need a technical co-founder, or you need someone that's technical at the top of your business if you're building a technical company, if you're building a tech startup. Outsourced dev shops are fantastic and can help support you, but relying on them exclusively to build your product for you creates a lot of inefficiency in your use of capital, and it's generally a red flag for VCs.
Yeah, even before you go out to fundraise, thinking about why you want to raise money and who you want to raise money from, because venture is not, oftentimes for many businesses, it's not the right source of capital.
Great point.
Venture opportunities are few and far between. And thinking about why you need that money, how much you need it from, and then who the right people are to invest in your business, right? It may be angel investors with domain expertise. It may be venture folks.
Okay, I've been told we have no more time. Scott wanted to do a Snapchat of the audience, so stand up and give us a shout in 1 minute. In 30 seconds.
Can we do that?
Yeah. All right, tell us when.
Go.
Go! Give us a shout. Yay, from Propelify.